Okay, let's dive right into this explainer. Today, we're unpacking the surprising geopolitics driving those surging energy costs you're feeling, well, pretty much every single day. We're going to look closely at the data, the global supply chains, and the conflicts that are rippling all the way from the other side of the world directly into your wallet. So, if you filled your tank recently and felt that sudden pinch, you've probably noticed something shifted. And honestly, you're probably asking yourself, why is gas so expensive again? For a lot of folks, this jump feels totally out of nowhere, but as we're going to see, it is absolutely not random. In many parts of the US right now, prices have suddenly shot up above $4 a gallon. And yeah, that's exactly the threshold where household budgets really start to crack. But to understand why that specific number is flashing on the sign at your local station, we actually have to look way beyond our own neighborhoods. Here's the roadmap for today. 1. The pain at the pump. 2. Global conflict, global prices. 3. The Strait of Hormuz choke point. 4. How fuel inflates food costs. And 5. What happens next. Section 1. The pain at the pump. There's this massive tug of war happening right now between everyday domestic factors and huge global forces. Here in the US, your gas prices are absolutely nudged by things like local refining capacity or, summer road trips. But honestly, those local factors are entirely eclipsed when global oil prices surge because of overseas disruptions and market uncertainty. We feel it instantly, regardless of what season it is here at home. Section 2. Global conflict, global prices. To understand the root cause neutrally, we have to look directly at the source text. According to the document we're analyzing today, it states, quote, "The biggest driver of high gas prices is the ongoing war that the United States, Israel, has waged against Iran." Now, as an explainer, we aren't here to take political sides. Instead, we're just mapping out exactly how this specific conflict, as outlined in our source, is physically impacting global energy markets. The source breaks this fallout down into three main consequences: supply disruption, market uncertainty, and higher energy costs. Look, even if no physical infrastructure is touched at all, just the mere risk of conflict creates this massive cloud of anxiety. The whole system is so incredibly sensitive that this uncertainty alone acts like a tax, instantly pricing in higher costs for everyone. Section 3. The Strait of Hormuz choke point. The math here brilliantly illustrates the scale of the problem. This single, incredibly narrow waterway, the Strait of Hormuz, handles roughly 20% of the entire world's oil supply. Just imagine 1/5 of the globe's energy needing to squeeze through one specific, tiny bottleneck. And right now, that bottleneck is severely restricted. According to the source material, in response to what the text describes as U.S. aggression, Iran has restricted traffic through the strait, while the U.S. has simultaneously imposed naval blockades. So, whatever the political framing, the physical reality is that this critical global artery is completely choked. The data on this is just staggering. The impact on physical shipping is massive. We've gone from a normal daily flow of over 120 ships moving freely through the strait, plummeting all the way down to the single digits. I mean, that is an absolute collapse in the volume of oil reaching the global market. Because oil can't move freely, global supply tightens immediately. And when supply tightens that dramatically, prices explode. Our source notes that global oil jumped above $120 per barrel at its peak. Depending on the exact timing, that represents a massive 50% increase since the conflict began. It's a spike on a scale we frankly haven't seen in years. And remember, gas prices at your local pump always follow these global crude oil prices. Section 4. How fuel inflates food costs. Think of global oil as this invisible tax on absolutely everything you buy. Let's trace the domino effect using just a simple bag of groceries. Step 1. Global supply tightens at the strait. Step 2. Gas spikes, meaning the delivery truck carrying your apples costs more to drive. Step 3. Your local grocery store is paying more just to keep the lights and refrigerators on. And finally, Step 4. The store passes the buck just to survive, which means your food costs go up. Energy prices are literally the invisible ingredient inflating your grocery bill. And here's the crazy part. All of this happens incredibly fast because of something called market expectations. This is the principle where traders price in the risk of supply disruptions immediately. Traders see the conflict in the strait and they hit the panic button today. They bake that geopolitical risk into the price instantly, effectively draining your wallet before a single barrel of oil is actually lost at sea. Section 5. What happens next? So, looking at all this data, our source points to three key factors dictating the future of our gas prices.
First, the conflict itself. Will tensions ease, allowing the oil supply to stabilize? Second, the Strait of Hormuz. Will the naval blockades and traffic restrictions lift so shipping can return to normal? And third, global demand. If economic activity slows down globally, energy demand might decline, which would naturally cool off those high prices. But if these disruptions continue, gas prices are highly likely to stay elevated.
As you've seen, your wallet is tied directly to this highly fragile, interconnected global web. Right now, that system is under immense pressure. So, until these geopolitical tensions stabilize, the vital question isn't just when the conflict will end. It's really how much more of the globe's geopolitical bill will you be forced to pay at your local checkout counter?